Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York on Monday, the 22nd day of December 2014, and this is the daily report for gold and silver. On thin holiday trading, increased volatility, we do have the precious metals under significant pressure today. Gold almost off 2%, actually off 1.91%. Currently trading off about $21 on the day, $11.72. The low $69.70 and that high $12.0430. Silver also trading substantially lower, actually off over 2% on the day, 2.65% to be exact. Below $16, high $16.27, low $15.46, current $15.62. Puts it off about 43 cents on the day. More on silver in a little bit. Traders, we do have the markets under substantial pressure. And if you recall from Friday's show, I talked about the possibility of initiating a short position in the market today. As the market came in and opened up, we saw that market come under extreme pressure very, very quickly with the increase in volatility. And the fact that we're going into the holiday season, we've got Christmas coming up this week, New Year's next week. My sense was that sometimes it might just be the best bet to kind of stand aside, let the dust settle. My sense is that this market is headed lower. My sense is that all things remaining equal, meaning equities markets continuing to move on its upward path, a dollar not coming under tremendous pressure, moving higher, and oil, which remains under pressure today. My sense is that we really have nowhere to go in this market but lower. And the key right now is the fact that it has absolutely broken below our first real level of support, which has to be roughly at around 1180. And the reason that I look at 1180 as such a critical point is these prior bottoms that, or the prior triple bottom that we had happen right around, call it 1180, market's trading at 72, so it's well below it. Now, we have had a low of 31, and that came in right here at the bottom. And as you know, my sense has been that really the area that we're looking at is anywhere between, call it 1154 to maybe 1160 is that zone, because what that zone makes up is really that 61% retracement. And so traders, I've compressed the chart, but this is the retracement that I'm talking about. At 1154, you get a 61% retracement, and it is a retracement from this entire move up, meaning about 700 to 1900, coming back down at really a 61% retracement. So my sense is that the point we really want to look to initiate a short position is any kind of solid break below this point, call it 1160 to 1154. We get a solid break below there, and really our next real level of support won't come in till about 1032. And that's what we talked about not only on our gold outlook, which we put out on Friday, but also our weekend report. So that's what we're currently looking at. So traders, obviously there are outside influences to the precious metals markets that we're following. First of all, let's take a look at the Standard & Poor's. This is the E-mini. Our record top sits just below 2080 as you can see right here. This happens at the end of November. Market then comes back down. We get this tremendous spike. This, of course, is what we got last week. And if we look at this market right now, we're trading at 2073. So just about 7 points shy of that record top. Oil continues under dramatic pressure. You can see this on our weekly chart. We'll go ahead and blow this up. But you can see last week we did make a lower low. We did make a lower high, but it did close as a lower low also, but almost near the open. Now we've taken that out this morning, and we're back down at around $55 per barrel. If we take this to a daily, you can really see what we're looking at. Let's let this refresh and get all of our stuff in. There we go. And so you can see we've now this one real level where it was trying to find some support here. We are trading now below that. So we've got oil trading lower, equities trading higher, And then lastly, the dollar. Dollar hasn't shown any weakness. It is very, very quiet today. 89.94, just below 90, though. You can see it's popped above this particular level of resistance that we had with the triple top back in 2010. In fact, let's go ahead and kind of compress this chart so you get a sense for what I'm talking about. And you can see this triple top that we had really starting mid 2008 all the way to mid 2010, and we absolutely have taken that out. We have traded above that. The next real level of technical resistance doesn't really come in till about 92 on the dollar, and that is because if we compress this a little bit more, you will see that we've got a couple of different areas on a technical basis that this market could go to. You've got these two series of tops here, which probably come in around 91. And of course, you've got these two tops right here that come in around 92. So in terms of a technical level, if the dollar continues to run higher, these are the two areas that I would expect the market to move to. So traders, what does this say for silver? Well, in the light of a strong U.S. equities markets, you do have pressure on silver, which I believe is trading in sympathy with gold right now. Of course, we talked about the fact that we have really major support at around 14. However, there is one minor level, and we're going to have to blow our chart up a little bit to show you that. But the one minor level that we have, which we want to see if silver can hold in terms of support, is based on these series of lows right here, and they come in roughly $15. So my sense is that if we continue to see gold under pressure, we will see silver drift to about $15 per ounce. Again, we're going into the holiday sessions right now. Expect increased volatility, increased sensitivity, more dramatic price swings, and expect, I believe, lower pricing ahead in the precious metals markets. This has been Gary Wagner wishing you, as always, good trading. I'll talk to you on Tuesday for another daily update and review.